From its peak in April, Intel stock is down well over 20% in just a couple of weeks. Is this a buying opportunity for a blue chip dividend paying stock, or is this a trap for investors with a stock that could go even lower? I'm going to answer those questions for you guys today, so let's get into it. So the beginning of this decline in Intel stock was actually when they reported their earnings just a couple of weeks ago. So let's start off by taking a look at the earnings report and trying to dissect this to figure out what exactly was in there that investors did not like. So here we can see EPS actually came in at 89 cents versus 87 cents expected, so a good beat there. Revenue was around 16.06 billion versus 16.02 billion, so another beat there as well. So pretty much if you look at these two stats here, it's not bad at all. We had a beat on both fronts, EPS and revenue. So clearly this was not the cause for the sell-off in Intel. So now let's look at the next metric that companies usually report during their earnings report, and something that investors pay a lot of attention to, and that is guidance. So here's where things go a bit south. The revenue for Q2 is expected to be down 8% year over year, operating margin down 4 percentage points, and EPS down 14% year over year. So this is pretty much down across the board here for Intel. Adding to this, fiscal year 2019 revenue is also now expected to be down 3% year over year, operating margin down around 3 percentage points or so, and EPS down 5% year over year. Again, all these numbers here are down across the board. Free cash flow is also expected to come in at 1 billion less than expected for the year, which is something that affects dividend paying stocks more than non-dividend paying stocks in my opinion. And maybe there's a few fears out there for a few investors that Intel may actually cut their dividend a bit or maybe not increase their dividend in the foreseeable future because of these weaker earnings. And now based on these results that we just went through, it seems like the real concern here is around Intel's guidance and how they project 2019 is going to go for them. Their growth is suffering as competitors like AMD and Nvidia eat up more and more of their market share. At one point, Intel actually had around 90% of the personal computer market share. And clearly this is not a lucrative business anymore, and Intel has missed the boat on mobile processors, where Qualcomm has actually excelled in. And investors were hopeful here that maybe Intel could find some success with the data center processor business, memory business, and the networking chips business. And by 2023, Intel actually predicts that they will have around 28% market share of these segments with their chips. So things aren't really looking that great for the company that was once such a massive behemoth that owned majority market share in the markets that it fought and competed in. But as we saw in fiscal 2019 guidance, we don't really think that this is going to continue for much longer. They actually expect the competitors to outpace them with growth in coming years in terms of revenue and profit. So to go from a company that dominated the chip space to be one of that's lagging its competitors is a big shift. And investors who have most likely been in Intel stock and have been investing in Intel stock for decades are most likely looking to move their capital now over to some of Intel's competitors, which offer much better growth potential, especially when you look at the data center space with competitors like Nvidia and AMD, who are growing substantially year over year. The next big thing investors who were in Intel stock were actually waiting for this year was the 10 nanometer technology, and that was actually delayed and contributed to Intel losing its lead in making the smallest chips to its rival Taiwan Semiconductor Manufacturing Co. Limited, or TSMC. So it seems like really in all segments that Intel competes in, it's losing its once powerful grip in the market. Now the plans are still there for them to launch 10 nanometer chips for high-end PCs later this year, and that'll expand to servers early next year. They also have plans for 7 nanometer chips by 2020, but who knows if that'll actually be on time or this will be delayed as well. And now looking at the company's EPS estimates for the remainder of 2019 and into 2020, you can see expectations are very low for this company. There's either a decline year over year or single-digit growth year over year for the remainder of 2019. Perhaps we will see some double-digit growth into 2020 if they're able to produce these 10 nanometer chips on time like they say they will without any more delays. So now I think we have a pretty good understanding of why Intel stock corrected, where it stands today, and why things are moving the way it is in the stock. And to add to this, there's also been a lot of pressure on semiconductor stocks in general in the last week or so as the tariff tension has increased with US and China. So that's something to also keep an eye on, which is adding more selling pressure to Intel than usual. When we look at the chart here from 2019, you can see the stock has given back pretty much all of its gains from the year thus far. And really, since its earnings, it has more or less fallen off a cliff. It held a 200-day moving average for a couple of days, but as tariff pressures mounted, it dived with other semiconductor stocks. Zooming out a bit more here, you can see looking at the weekly, it looks bad, but it puts things more into perspective. The stock seems to be pulling back to 200 moving average on the weekly, so I'll be watching it closely there to see if it does find some support. This also happens to be where we have a juicy gap that I think is about time the stock fills at around the low $40 mark or so. This level also coincides with the 50 moving average on the monthly as well, which is something we haven't tested in over 3 years here in Intel stock, so this is well overdue. If selling pressure continues, I think we will very likely see Intel come down to around $40 to $41 or so before possibly finding some support here. Now, if you're an existing Intel stock shareholder and you've been holding the stock for years, this may be a pretty scary time for you because you haven't really seen Intel decline at this rapid pace when the market has generally been doing fairly good. I mean, it has lost around 25% of its overall market cap in just over 2 weeks, which is very rare, especially when you look at large blue chip companies that are over $200 billion. But anyways, it is what it is. You can't really change the past, but what you can do is kind of make a decision for the future with your investment in Intel. As of this point, if you're still an Intel shareholder, you kind of want to ask yourself the question, am I okay holding Intel stock, reaping in that couple percent dividends, and really bottom line being okay with the stock underperforming the overall market in the next few years? Do the pros outweigh the cons? Does it really make sense to hold on to this stock? Now, on the flip side, if you love the company at $55 per share, why wouldn't you love it right now at $45 per share? Is it because some of the fundamentals have changed and the fundamentals may be looking a bit weaker? Or is it simply because the stock price has dropped $10 per share and you do not want to keep holding this stock? Whatever it is, I would take my time, make a rational decision here, don't act on emotion. Look at the long-term perspective here on Intel, see if you think that the stock is actually just going through a correction phase right now, or if you think this is going to be the beginning of the actual turnaround in the stock where it declines year over year moving forward. These are all questions you really need to ask yourself for every single investment if you want to become a true long-term investor in stocks like Intel. Now, me personally, I currently do not hold a position in Intel as of recording this video. It's been a stock that I've always kind of monitored, had on my watch list, but never quite found incredible value in entering a position in. And I'm like a lot of other investors, I like the space that Intel is in, but I like their competitors more than Intel itself. That being said though, at the right price, this is definitely a stock I could see adding to my portfolio because there's a few good things going for this company. The first is that it's a blue chip, $200 billion company, and all this stuff and news around the delays in their chips is all short-term thinking in my opinion. And really you gotta look at the flip side of this. If their chips do come out and they're much better than the competition, that'll more than make up, in my opinion, for the months that it has been delayed because a lot of companies or customers that have been waiting for these chips will actually see the value in them and start purchasing these instead of their competitors. The second reason is because they currently pay out around 2.7% dividend, which is pretty good in my opinion, again, for a world-renowned blue chip company that still has a lot of growth ahead of it over the long term. So even if the stock price continues declining a bit, you get a bit of that stability here with the dividend and the constant cash flow from it. And the third reason is because I currently only hold one semiconductor stock in my portfolio. The only other one that I'd be consider adding right now to my position based on current prices would be Intel. Applied Materials is also one that I'm considering, but not really sure if I'll make a decision on that. If you guys have any opinion on Applied Materials, let me know in the comment section down below. But either way, I think Intel could be a nice addition to my portfolio to kind of diversify myself from the single semiconductor stock that I hold currently. But nonetheless, I think that Intel could be a nice addition to my portfolio to kind of give myself a little bit more diversification to semiconductor stocks in my portfolio. Now, that being said, I won't be interested in purchasing any Intel stock until we're in the low $40 range, or maybe even in the high $30 range. There's nothing really that's screaming a buy to me currently, screaming value here. And although I do see some potential for long-term growth in Intel, I think this is going to be more of a stable stock in my portfolio and not going to be a stock that's going to double or triple my money over the next few years. They do have a PE of around 10, which is pretty good, and compared to some of the competitors is very low. So if you're looking at it from that perspective, it may be a value play. But I like to look at other aspects of the business too. I like to look at where the company is, how the competition is doing. And when I look at all these factors to try to make my investment decision, I still want to wait out here for Intel and see if we can see lower prices. Now, analysts see about a 12% upside in the stock at slightly over $50 per share, but in my opinion, there are better opportunities out there currently. Now, I absolutely do not think Intel is going anywhere over the long term, and I think that the business will adapt and continue growing their customer base and maintaining their customer base as long as they continue producing these high-end chips that they promise. And really, by investing in Intel right now, you're kind of betting that they're going to maintain this customer base that they currently have and continue growing over the long term as well. Now, as always, I'd love to hear what your thoughts are on Intel, and if you're an Intel shareholder, let me know in the comment section down below. Also, check out this video up here if you have some time. You might find that interesting as well. Thank you so much for watching, guys. Hope you enjoyed this video. Don't forget to invest positively, and I'll see you in the next one. Peace.